Ethereum's going through its scaling mission, and that's why you can see that it's performed very well this year in terms of most metrics. Fees have been strong, but fees have actually been declining because they're making those strides to make costs in the Ethereum ecosystem cheaper.
So that's kind of like a government deregulating the economy, freeing it up, charging lower taxes, creating a better free market economy. Because before Ethereum, to your point, back in 2021, with the economic activity that was going there,
essentially now as an application, right, as a business in the crypto economy, you can, instead of going to Ethereum and building on the Ethereum stack, you go to an interoperability protocol that has the connections into all of the different chains, and you deploy on that interoperability protocol, and atomically you launch across all these different chains.
During the peak of the crypto boom in 2020 and 2021, Ethereum was the place to be. Every major project, NFT mint, and DeFi experiment lived there. The problem? Fees skyrocketed to the point where small users were effectively locked out. Raoul and Real Vision's chief crypto analyst Jamie Coutts liken it to living in California. Amazing opportunities, but so expensive that eventually people pack up and move to cheaper states. That's exactly what happened as activity migrated to Solana and Layer 2s. Coutts points out that Ethereum hasn't ignored the issue. Developers understood that scaling was existential, and since then, upgrades have pushed fees lower. They're not dirt cheap, but they're manageable, and the network has become more welcoming again. Think of it like a government that cuts taxes and streamlines regulation to kickstart economic growth. People come back when it's affordable to do business. Layer 2s in this framing are the lower cost states. They give users and builders an option to avoid high fees, though they trade away a bit of Ethereum's base layer security. But the future may not even force that choice. Coutts says interoperability is advancing fast enough that developers won't need to pick Ethereum, Solana, or any single chain. Protocols will connect to multiple networks by default, letting builders focus on their product instead of chain politics. For users, that means lower costs, smoother transactions, and fewer barriers. The monopoly era may already be over. If you found value in this breakdown, please hit the like button, subscribe, and share it with other investors who are paying attention. We're here to keep bringing you sharp analysis and voices that actually understand what's unfolding. Thanks for watching.
There are no other alternative countries to go to, then that country has got monopolistic sort of pricing power and will overcharge for services to a point where people start to get fed up and move elsewhere. And that kind of happened in 2020 and 2021. So yeah, and Ethereum knows this, and Ethereum's going through its scaling mission. And that's why you can see that, it's performed very well this year in terms of most metrics. Fees have been strong, but fees have actually been declining because they're making those strides to make costs in the Ethereum ecosystem cheaper.
So that's kind of like a government deregulating the economy, freeing it up, charging lower taxes, creating a better free market economy. Because before Ethereum, to your point, back in 2021, with the economic activity that was going there, was too expensive. It was the California of the crypto economy, and everyone's like, "Yeah, we love it here. It's amazing, but I can't afford to live here any longer."
Yeah, we don't like the policy, so we're going to move.
And welcome to Solana.
Yeah,
or the Layer 2s.
Yeah, exactly.
So you think of the Layer 2s as kind of different states somehow within that equation, and they're cheaper, offer lower tax breaks, but they're not quite as good. There's not as much policing around, so they're not as secure. It's amazing how similar this is once you think of it in economic terms as digital economies.
Yeah, no, absolutely. And as more value comes on chain, people will start making these, discernments around which jurisdiction they want to operate in. But to that point as well, I think that it almost gets abstracted away in the end. If you look at sort of interoperability protocols that are out there that sort of no one ever speaks about, and they're still fairly nascent, and there's too many of them at the moment. But essentially now as an application, right, as a business in the crypto economy, you can, instead of going to Ethereum and building on the Ethereum stack, you go to an interoperability protocol that has the connections into all of the different chains, and you deploy on that interoperability protocol, and atomically you launch across all these different chains. So you can sort of see a world where even some of the the tougher choices that developers need to make now about which ecosystem to go first is starting to get abstracted away, which is ultimately good for the end consumer, which is us. I just see that we've got a situation where value is concentrating in the top L1s, and I think that it's becoming harder and harder to maintain a thesis around these tier 2s in the smart contract platform world, or tier 3s, let alone, as value does get more concentrated in the larger.
And what are the tier 1, 2s, and 3s? Give us examples of them.
So if you just look at settlement value, this is actually in the next report, Raoul, which will be coming out in the next couple of days, but I focused in on settlement values, right? So, one half of your Metcalfe's law model. Yep. This is a breakdown of settlement volumes across L1s and L2s, most of the large ones. So Ethereum this is a 30-day median. So it's about 28 billion per day, which is just, wild when you think about it. Tron, which, has much lower application diversity. It's basically a one-use chain, and does have governance issues as well. It's not, you couldn't never claim it as decentralized as Ethereum, but it settles about 24 billion. Wow. So right there you have, the lion's share of all settlement value across the crypto ecosystems. Now, Solana and Sui, which has really raced up. The growth rates in Sui this year have been phenomenal. And I'm trying to dig a little bit deeper in terms of like where that value is sort of flowing from and to.
I think it's because I did the work on it in GMI and looked at its relative growth versus Solana, because similar fast performant modern chains. And I mean, it's massively outstripping the speed. Obviously it's at earlier stage. So of course the rate of change. It seems that it's the Bitcoin settlement layer that's big, plus stablecoins are moving fast. And the DeFi ecosystem is starting to work as well.
Yeah. So Bitcoin on Sui.
Yeah.
Yeah. Well, I mean, I was genuinely surprised that Sui had increased its position in terms of settlement values to where it is now, where it's rivaling Solana. So that's pretty phenomenal.
Ethereum and Solana may look like rivals in the same arena, but the real divide isn't legal, it's adoption. Ethereum has the edge in regulated real-world assets, yet that lead rests on shaky ground. Nearly all of its RWA volume comes from one product, BlackRock's BUIDL fund. That pool makes up 70 to 80% of Ethereum's RWA market, and over 85% of it sits with just a few large holders like Maker, Athena, big market makers, and select exchanges. Strip that away, and Ethereum's supposed dominance doesn't look so broad. It's institutional, not retail. Solana, by contrast, is showing something Ethereum hasn't: grassroots traction. Its tokenized X stocks already add up to about $500 million and are distributed across tens of thousands of wallets, likely more than 100,000 addresses. That's clear evidence of retail involvement, a much broader base of activity than Ethereum's concentrated holdings. And it's not stopping there. Tokenized equity is coming, with the potential to layer on hundreds of millions more in assets. Big players are noticing. A $1.5 billion deployment at $232 per token isn't a casual bet, it's conviction. The open question now is whether Solana and crypto as a whole still run on the old boom-bust cycles, or if institutional money is reshaping the rules. Let's get back to the interview.
There is like a tier 1, tier 2, or tier 3 sort of aspect forming in DeFi protocols. Like with borrow lend, it's really Aave and Morpho, I guess. There's a whole list, a long tail, and some of them are high quality, cheap, and growing very, very, very fast, but there is sort of a tier structure happening. So I thought that there was going to be a re-rating, and I still believe that to be the case. And I think there's a case to be made for smart contract platforms to be re-rated down when you start looking outside of the top tiers. Like, I look at some of the multiples and like, I'm going to really piss off a lot of Cardano fans, but like, the thing doesn't have activity. It trades on an insane multiple to its settlement value and to every other metric. And I think that those multiples have to compress over time. And I'm surprised it hasn't.
It depends on the number of users still. I mean, not users, but wallets, whatever it is what's driving it. because there's not network activity.
Yeah, something's driving it. Not sure.
Yeah, and I don't want to piss off everybody by
Yeah.
talking about these things, but the revenue thing to me keeps coming up, and it just reminds me of the 90s, growth at a reasonable price, and it always underperformed the actual things they wanted to buy. But it's justifiable, it's high quality, you kind of can build a good thesis around it, kind of makes sense. And as network activity increases across all of the Web3 ecosystem, we will see activity on Uniswap, Aave, everything just increasing. Just as more things come on chain, there's just more activity. I mean, there's good businesses.
Yeah. And I think they to some degree, they end up owning the customer in the end, like the business, and a lot of the chains get sort of like abstracted away. So I think there's a case. I haven't actually added any DeFi.
How do they own the customer? Talk me through that process.
More so from a relative to smart contract platforms. I think in the future, we operating on chain will not necessarily be as attuned to which blockchain we're operating on, because we're going through an application front end, which is not the chain. It could be the wallet, right? The wallet is really not the new front end. It is the front end into the crypto economy. And so, or the specific application that we go to for whatever purpose, whether it's to swap something or, to collateralize a loan or whatever it might be. And so whether we're operating on Ethereum or Solana or an L2 is sort of irrelevant. It's more so the application. And if we like that experience with that front end, we'll do more business with it, and they will collect more of our sort of, our fees and revenue from us. So that's more the case. It's not to say that in the hyper competitive crypto economy with low barriers to entry that, a competitor can't come along and knock Aave off the top of the table, or knock Uniswap off from like DEX, from spot swaps or spot volumes. That can happen. But I just think that relative in these two worlds of applications, like the higher layer versus the bottom layer, I think in the future, we'll think less about the chain and more about the application. I mean, you've got Base, Solana, and Ethereum, right? Ethereum main chain, as being the sort of the big venues. Although, Swee's DEX volumes are definitely on the rise as well. And Hyperliquid's DEX volumes relative to perpetuals is like about 5% of perpetuals. It's just like the perpetuals business is insane. But it's also growing its spot volumes as well. I think it's an exciting space because, I've had this discussion with the index provider that I've worked with, which is a company called Bitformance, to create crypto indices for retail, for the masses, right? And originally, we classified the subsectors as like perpetuals and DEXs into two different subsectors. And that might be still valid, but I see a world where DEXs become more than just spot. They'll become perpetuals. They'll also have inbuilt borrow lend.
Makes sense, right?
Or interfacing like Legos, but like they'll all go after each other's business. So I think it's interesting. I think Uniswap and, these businesses have an opportunity to like diversify into other aspects of DeFi. So look, I mean, I like Aerodrome. It's interesting, because it seems to be the dominant one on Base that has a very strong position and growing fast. Radium and Pump on Solana are very strong as well. And then you've got Hyperliquid coming up, and then on Sui you've got Deepbook.
What stands out in this debate isn't just the competition between Ethereum and Solana, but how quickly the landscape of digital infrastructure is maturing. Ethereum, once hamstrung by painful fees, has steadily rebuilt itself into a more functional base layer, while Solana has carved out its identity by capturing the everyday crowd, people actually transacting, trading, and experimenting at scale. That difference matters because adoption isn't just about technology, it's about who shows up and stays engaged. On one side, side, Ethereum still carries the weight of institutions, but much of its strength hangs on a single flagship product and a handful of whales. On the other, Solana's footprint is spreading across tens of thousands of wallets, pointing to a more democratic style of growth. Those patterns show two very different roads toward relevance, one top-heavy, the other grassroots. The bigger picture is that walls between chains are thinning. Interoperability is advancing to the point where users may not care what network they're on, only that it's cheap, fast, and reliable. If that's the direction we're heading, then Ethereum versus Solana isn't the endgame. The real story is a future where multiple ecosystems knit together, breaking the old monopolies and reshaping what mainstream adoption looks like. So stay tuned. If you're into real, data-backed takes on the financial system, hit like and subscribe so you don't miss the weekly updates. Thank you for the support, and I hope you enjoy the video.